I want to welcome Rob McEwen. He is the chairman and chief owner of McEwen Mining and the founder and former chairman and CEO of Gold Corp Inc. Welcome, Rob.
Thank you, Ali. I'm happy to be here.
Great. Thanks for stopping by. So just to start off, I've seen you give some brilliant presentations, online regarding why precious metals are set up to be a high growth, long-term investment. So can you just, in a nutshell, summarize why right now could be a good entry point possibly into the precious metal sector?
Definitely. I think the best reason for owning gold is history. And that is whenever a government rapidly expands its monetary base far beyond the growth of its economy, the result has always been the same. And you go way back in time, and that the relative value of its currency is debased. And effectively, the currency buys less. The dollar you have in your hand just doesn't go as far. And today, I think we're in a very unique situation because it's not that we have one country issuing a lot of fiat currency or a small group, but we have the whole world almost that has been on this orgy of going out and issuing currency. So they've all expanded their monetary base, and there's no precedent for this in history ever. And so we're already starting to see strong increases in prices in lumber, food, energy, even leisure products. And I think this is just the beginning. And you looked a number of years ago when Zimbabwe was going crazy. I remember one of my associates coming in and gave me $100 million note, or whatever their currency was, but it was 100 million units. And I thought, oh, isn't this great? I've just become a centimillionaire.
Right.
And then he came back and he gave me, a couple of months later, $1 billion note.
Wow.
And I thought, okay, I've just moved from centimillionaire to a billionaire. Well, what's it buy me? It was buying a loaf of bread. And today, that $1 billion note now buys more as a collector's item than what it could have bought in the economy. It couldn't have bought a loaf of bread.
Right.
So I just think the world's gone through this. Maybe it's in the battle of COVID. Maybe it's looking at their economy slowing down. But for whatever reason, they've issued an enormous amount of money and it's cheapened or debased. And I think we're going to see, this is just the beginning of the price increases. And gold has been lagging. Low interest rates have caused people to go and buy real estate, buy stocks in the broad market. But, and that's another way of dealing with the shrinking value of your currency. But at one point, you have to think about liquidity. And gold is almost instant liquidity, whereas you can't sell your house very quickly, usually. Maybe in this market, you get all sorts of bidders, but there at some point, it just evaporates. So I'd say it's a great time to be making an investment in gold. And the gold shares have certainly suffered in the last year. So.
Right, exactly. And I always like to point to the 2000 tech bubble when gold shares were at their absolute worst, but then that was followed by a 10x move, right? Because that's when, usually the most pain is followed by the reversal of sentiment. So
exactly.
Yeah, exactly. One thing else I wanted to ask you about, because you're well known for being the founder of Gold Corp, a multi-billion-dollar company, which was just acquired by Newmont Mining. I just have to ask, what went right there? And how can investors what should we look for when we're trying to find the next Gold Corp? What are some key indicators to investors? Because that did really, really well for a lot of investors.
Well, I tend to invest in areas that maybe not everyone else wants to invest in. I tend to look at situations that are perceived to be risky. They don't usually have a dividend right away or ever. But I would say In Goldcorp's case, we looked at our problems and we searched for alternatives or solutions from outside the industry. We invested heavily in exploration. We had to fight to combat the ingrained attitudes and approaches to mining. I mean, we went through a 46-month-long labor strike where we produced nothing. We
Wow.
shut down, we tore down the old mine and built a new mine during that period. And we went from producing 50,000 ounces of gold a year at $360 an ounce cost to 500,000 ounces at $60 cost. There was a 60-fold change in the economics. So why did I like that location? Red Lake, Ontario was known for producing high grade. There were two mines, the Dickinson mine and the Campbell Red Lake mine, and it was owned by Placer Dome. I bought control of Dickinson and it became one of the key elements of Goldcorp, but it hadn't been explored. It had a history of producing high grade gold, and next door, the Campbell mine was one of Placer's most profitable mines. It was high grade. So I looked at it and I'd followed it for a while, and they hadn't put any money into exploration. Management had gone out and been convinced by their investment bankers to sell a third of the mine for, I think they sold it for 10 million. And then they bought it back for over 30 million a few years later, that a small percentage. But they still didn't put any money into exploration. So one of the first things we did was, one, buttress the cash flow, and then by putting in some other companies. And then we committed $10 million to exploration. And a mile below surface, we hit something that they rewrote the geological interpretation of the area. Our discovery announcement was 9 drill holes that averaged 9 ounces per ton over an average width of 8 feet. And that grade of 9 ounces per ton was 30 times the grade we were mining.
Wow.
And it was explosive. And then it was just a question, well, let's keep stepping on the exploration accelerator. And that resource grew. And then my mine engineers came along and said, well, we've got a large enough resource. We'll build a mine of this size, a process plant. And I went to them and said, why? Why? I mean, we've been adding more than 30% a year to our resources. Why are we going to build something this small? They said, well, that's because that's all we have. And I think you have to look and say, well, how quickly is this growing and how much bigger could it get? And I asked our chief geologist, I said, well, have we found all that we're going to find? And he said, no. I said, well, why haven't we? Tell me how much is going to be there. And he said, well, I don't know. And I said, how long is it going to take? He said, I don't know. And I said, those are crummy answers.
Right.
So then we went to the world and asked the world to tell us where we'd find the next 6 million ounces by launching a contest over the internet in 2000, which turned out to be one of the first successful examples of incentivized crowdsourcing. So Goldcorp suddenly took on a profile much larger than what it should have for its size. We became very global because we did something, we gave away all of our geological data over the web without a confidentiality agreement. And so we invested $500,000 setting up the contest. We gave out $500,000 in prize money, and we found $3 billion worth of gold.
So you actually got information from that.
Oh yes,
Yeah.
It was, I remember seeing the winning submission come in, and it had computer graphics of the like I'd never seen in the mining industry. And after I picked up myself off the floor, I got on the phone and called 3 large institutional accounts that were in the city. And I said, you've heard the story, you haven't bought, do you have 15 minutes? I said to each one of them, I want to show you something that'll you'll understand immediately why you should buy. And after my 3 meetings, that afternoon, there was 15 million shares of Goldcorp purchased, and it kept going.
So you were a pioneer using the new medium of the internet, like in 2000, really early on. So that's how you built this multi-billion-dollar major company. And so now you are, the chief owner of McEwen Mining. So clearly you have a mind for this. And so what should investors look for with this project?
Well, I'll just come back to one part in terms of you asked about investors looking for
Yeah.
situations. And again, it's from my perspective, I look for things that aren't popular, that are being ignored in the marketplace, not what's getting all the press. And in the case of Red Lake, it was an ignored property in an established gold district. And I think you can point to Osisko, the East Malartic mine, was a case where there was a reinterpretation and thinking of modern technology being applied to an area that had only been underground mining. And they said, let's open it up as an open pit and get the lower grade material. And there are a number of situations like that as well, where a reinterpretation of the geology or a new look at geology, like I invested in Newfound Gold in Newfoundland early on, and it was because they had an interpretation of geological structure, a rift that was coming down the east coast of North America out of Scandinavia. And at this continental collision point, you had mineral flowing to surface, and gold was one of them. And so looking at different ways, and I guess you can look in Australia where they found gold in areas that have been mined for a long time, but largely ignored. You can look at Kirkland Lake or Fosterville. All of those are reinterpretations. So it's just being alert and not taking necessarily the gospel that's preached on the street, that it's dead. And you want to look at the financial commitment and the passion by senior management. Are they in there with just options and no money? Or do they have they put a lot on the line because they really believe in it, not just a promotion at the time? So in McEwen Mining, it was created when I left Goldcorp. I started buying junior companies. I buy anywhere from 10 to 30% of the company. And I'd said, I don't want to be on your board, but I want a right to reject divestitures or joint ventures. I want to have a say on that. I want to have a veto. In 2012, I put 2 of those companies together, Minera Andes and US Gold. And Minera Andes had a joint venture in Argentina, which delivered cash flow. It had a gold silver mine down there and a large copper project that I'll get to. And US Gold had a number of development projects, but no cash flow. So I thought, well, we'll use the cash flow from Minera to fund the development of US Gold, which we put them together and it became McEwen Mining in January of 2012, which was the worst time to put a company together because you had all markets were hot, and then they just started rolling over in the precious metal space. So you got burdened with all sorts of goodwill on your balance sheet.
Right.
So today we have production coming out of Argentina, out of a little bit out of Mexico, out of Nevada, and Timmins. And that's gold and silver. And then we have this large copper project. Unfortunately, in the last 2 years, we went through a horrible operational performance. We missed guidance by a really large measure. We have brand new senior management now. We're delivering on guidance. We'll have to do a couple more quarters, I think, before the market really says, okay, I'm feeling comfortable again. But historically, we had traded at a premium to the GDXJ, a considerable premium, and we lost that in 2019. Our balance sheet got constrained. We had to do a couple of issues at prices I didn't like, but now it's turning around and we've outperformed the GDX since March of 2020. We've outperformed gold, we've outperformed silver, but we were really pushed to the floor. And now we still have quite a bit of room just to catch up to the GDX. So I'm optimistic about that. Our treasury is growing, and we decided that our asset base includes this very large copper project called Los Azules. It's in Argentina, and it needs money to advance it to a preliminary feasibility or pre-feasibility stage, and then on to a feasibility. So it's in a subsidiary, a wholly owned sub, and we're taking on private investors right now. And in about 13 months or less, we'll be doing a IPO on this. But if you looked at it and looked at indicated and inferred resources of copper, there's 29.5 billion pounds. And then it has 5.5 million ounces gold, 191 million ounces silver. So if you put that all on a copper equivalent, it's 32.9 billion pounds of copper equivalent. The issue, we're giving McEwen Mining 1.25% NSR on the property and valuing the property right now at 175 million, which is equivalent to, with the royalty in that, 0.6 of a cent per pound. So what we're going to do is spend money building a new access road, drilling 53,000 meters of drilling, studies to move all of this to a pre-feasibility. Now, if you look at, this is like a real estate play. It's you're rezoning. So you buy a piece of farmland and you want to get it into residential. So you get it rezoned and there's a bump in price. And then you work to get your permits. There's another bump in price. And then you start building and there's another bump. So in the 8 years between 2010 and 2018, there were 12 large copper transactions made. And at the very early stage, when you don't pay very much per pound. But then you start moving into a PEA and the price will go up to a couple of cents a pound. Pre-feasibility, there were 2 in that period. There might be anomalies, but they were at better than 10 cents a pound. And feasibilities, they were lower. They were 6, 7 cents a pound. But we're at 0.6 of a cent. So you could get quite a large increase there. So I have personally put in, we're looking to raise between 40 and 80 million dollars. I have personally put in 40 million US already into this, what will be called McEwen Copper. We're looking to raise the next up to another 40 million. And minimums, it's a $10 a share, minimum investment $1 million. And think of it as a Series B financing and with a public offering in 13 months.
Wow.
So yeah, to me, and so right now at 175 at 0.6 of a cent, at 3 cents, that becomes just under $1 billion value. At 5 cents, it's $1.6 billion. So you look at the relative values paid and say, well, that's the rezoning we're going through. That's what I'm hoping to see. And McEwen Mining, will retain 82% of that ownership of the copper if we raising the 80 million. So I think it has a very big impact on McEwen mining, because suddenly it's taking something that hasn't been getting much value on our balance sheet or in the market, and suddenly being lifted quite dramatically.
That's very exciting. So you have these known just billions of so it's just a massive, absolutely massive known resource, right? So it's just a matter of funding the project to get the resources out of the ground at this point, right? Like you
Yes.
said, yeah. So you're going to raise money. What kind of return are you expecting? Is there a projection for that?
3 cents would be a low value for a pre-feasibility study development stage. At that point, you're going from 175 to just under $1 billion. So you're looking at 4 or 5x. You move up to 5 cents, or you're 1.6 billion on that. That's almost the 9x. And the two pre-feasibility stages, one in 2011, the other 2017, went for over 13 cents a pound.
Okay, fair enough. So that's the roadmap, right?
Yes.
Yeah.
We did a preliminary economic assessment, PEA, back in late 2017, and it was done at $3 a pound of copper. It was modeled to run for 36 years. In the first 13 years, it's mining 0.6 to 0.7% copper. So CapEx was 2.4 billion, and it paid back in under 4 years. The cost, let's put it on a gold equivalent for a bit, because I'm known more for gold. So I like to look at things in gold equivalent. 29.5 billion pounds of copper. If you take today's copper price and today's gold price, that would be equivalent to a 70 million ounce gold deposit. The production is modeled at 415 million pounds of copper a year. That, again, using current prices, would be equivalent to just under 1 million ounces a year. And it was modeled to produce at $1.14 a pound, including gold and silver credits. That's about a $500 cost per ounce. So,
Wow, that's great.
At $3, it had an NPV at an 8% discount of 2.2 billion. At current copper prices of 410, 420, it has a value NPV of greater than 5 billion at an 8% discount. So lots of leverage to the price of copper.
Now you're seeing some deep value here, right? Because it seems like the market's in a bit of a mood right now, and things are lower. So, like you said, you look for things that are ignored, and obviously that's how good investors do it, right? You buy really low. So you think right now it's just absurdly kind of low, given this huge resource that you plan to develop, right?
Yes. Yep.
Yeah.
It's a big value driver. To get to the pre-feasibility study, it'll probably take 2.5 years.
Right. It'll take time. Yeah.
But you're starting to see, the outlook for copper as they electrify transportation.
Right.
All the large auto manufacturers are talking of big increases in electrical vehicles displacing internal combustion engines, and deficits coming into the copper market in terms of annual production.
Exactly. No, it's really great. So this is the primary focus of your company now at this point, right? You have this beautiful kind of project that, it's just a matter of going through the motions and getting it done, and you'll get that return on investment that people are looking for.
Well, we feel that's a big value driver. We've assembled a team of experienced copper players to drive that project forward. On McEwen Mining, the operations that gave us headaches last year are performing quite well. We're delivering on guidance. We'll see a 20 to 40% increase in production over last year. Costs are coming down. Our cash cost in Timmins was just over $900 an ounce
Oh,
so far, and Gold Bar is performing. It had a rough startup, so those, and we're spending in Timmins in Nevada a total of 14 million. There's another 9 million being spent on our joint venture down in Argentina. We have a partner. We own 49% of a high-grade silver gold mine down there. And within, if you were to look within McEwen Mining, you could look at the silver production we have, and our partner is a silver producer, Hochschild, and they convert the gold into a gold equivalent. But our share would be 5.6 million ounces of silver a year coming out. And we have a project in Mexico where we were mining, but it's a silver project with a feasibility study on it, which if you did the two stages, you'd be up to about a 10 million annual production of silver.
wow. So just a lot going on, including the value driver that we mentioned, McEwen Copper, which is very, very exciting. And obviously you have the experience to see this through, given your history with Goldcorp. So really exciting. I'll definitely be looking for updates on, all of this. So where can people kind of stay on top of this and learn more?
They can go to our website, mcewenmining.com. Would have that. I should add one thing, that with the 40 million I've just put in to McEwen Copper, the cost of my total investment in the McEwen Group is just over 200 million.
Wow. Oh my gosh. So you're a believer.
I take $1 a year.
Wow. So you're a true believer in this, right? I mean, you see the investment potential, obviously.
Yes.
So we'll go to the website. Anywhere else or anything else you wanted to add?
No, that pretty well covers it, Elliot. But I really appreciate your interest.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.